Hey everyone, how's it going? It's Dan Russo, the Chief Market Strategist here at Chaikin Analytics. Just wanted to touch base after being on vacation for a week. Come to you with my updated thoughts here on the market as I get back into the swing of things. But first and foremost, a special thank you to Pete Carmasino on our team here for doing a great job filling in, writing my morning note while I was on vacation last week. So as we dive right back into everything that's going on here in the marketplace, what obviously jumps out at me is the fact that the S&P 500 and SPY and the NASDAQ 100, the Qs, QQQ, went out last week at new all-time highs, right? So that's obviously bullish. As I was going through my chart work over the weekend, and I'm not going to show any charts here today, just wanted to kind of chat thoughts and ideas. What I noticed on weekly charts that I was looking at across asset classes, across sectors in the equity market, across themes, whether it was growth, value, small, mid, large, is that the leadership areas of the market, the areas of the market that we've been talking about on which we've been bullish, their weekly charts have something in common, at or near all-time highs above the levels that we saw back in February before the COVID panic and the 30+% sell-off in the S&P 500. The lagging areas of the market, whether it's small caps, whether it's value, whether it's some of the lagging sectors like financials and energy, those areas of the market all are running into trouble at their June highs. So not quite back at the February highs yet, and running into resistance and starting to fade from the levels that we saw back in June. So the leaders continue to lead, the strong get stronger, whether it's growth over value, which broke out of its consolidation this week. I touched on it in my morning show on stockcharts.com today. Whether it's tech moving to all-time highs while the financials can't get through their January highs. The bigger picture themes remain in place, and that it jumped out at me because, in fairness, I'm going to tell you I didn't spend a lot of time last week looking at what was going on, but when I started to dig in over the weekend, that was what jumped out at me. The fact the strong remain strong, moving to new absolute highs. The laggards continue to struggle, not quite at their absolute highs yet, and in some cases struggling to get through the interim high back in the kind of first, second week of June. So that jumped out at me. What also jumps out at me, however, though, is the fact that across the board, all three of the major market ETFs, SPY, IWM, and Qs, now have either a very bullish, in the case of the Qs, or bullish rating, as is the case in the other two, bullish ETF ratings in our model. So that makes me sit up and take notice. If I drill down on the holdings of the individual ETFs, again, across the board, there are more bullish stocks than bearish stocks per the 20-factor model that we use here at Chaikin Analytics. So that's kind of what's jumping out at me across the board. A bullish trend does remain in place, but if we take a step back and look at who the big picture secular leaders have been, they remain leadership. And they are at or near all-time highs, while the secular laggards, think energy, think financials, think value, are not at or near all-time highs on an absolute basis and are actually struggling at a key interim level. So that's something I'm going to be watching very closely over the next couple of weeks to see how that plays out. Now, there's been a lot of talk about rotation away from growth and into value, and our view before I went away was that it was purely a stall, a pause within the context of a bigger picture uptrend. And if we look at the relationship between growth and value, that actually broke topside last week. So that's something that I think is likely to persist in the weeks ahead. Other themes on my radar this week, obviously the Jackson Hole meeting will take place virtually this year. But we are going to hear from Chairman Powell at the Fed. So always going to be interesting to hear what he has to say as it relates to interest rates and any commentary on guidance in and around interest rates, because that's obviously a key driver to a lot of the views and strategic thoughts that we have and that we write about on a persistent basis. So hope everybody had a great week last week. As we kick it off on a Monday, I just wanted to highlight a few of the things that are on my radar screen today as the new week begins. I look forward to coming back to you soon. Be well, be safe. We'll talk soon.